How y'all doing?
It's Vera again. This will be like the millionth time I'm like apologizing for ghosting, but I will apologize again. Guys, I'm so sorry for not posting for like it's been long. Like it's been long, but I'm going to try and be consistent. I mean, I'm just starting, so what's actually my problem? Alright guys, so I'm going to try and be consistent. Yeah. So today we're going to be talking on single entry and incomplete records. Yeah. 1 second. Let's start by the definition of single entry and incomplete records. Does this entry sound familiar to us? Double entry principle, yeah. But this topic is actually like it's the opposite of it. You get so double entry system, like we all know double entry system, debit the receiver, credit the giver. Every debit entry must have a corresponding credit entry, yeah, something like that. So single entry is a system of bookkeeping which does not conform with the basic principles of double entry. Like I said, since accounts are normally kept in a double entry aspect, any system which ignores this twofold aspect is known as single entry. The records prepared by the record keeper are incomplete or inadequate. You know, it's just like saying like all this one-sided entry, something that doesn't reflect. For every debit entry, there has to be a corresponding credit entry. So this topic is this single entry is just talking about like incomplete records. That is, some records are not like due to the inadequacy, like the fact that the records are not complete, you won't be able to get some figures like maybe your sales, your purchases, your opening capital, your profit. So you need to use the information which is given to you to actually get, let's say for example now, your purchases. If you want to get your purchases, you need to like use your total creditors control account, and we've actually treated that control account previously. So if you are new to my channel, please don't forget to subscribe, like and share, and you can also watch some of my previous videos. So some of the disadvantages of single entry, we have it does not conform to the principle of double entry. Like I said, the flexibility of the double entry principle is lacking. It is difficult to obtain accurate information since the records are not complete. For example, like I said, the purchases, your sales, your opening capital. So all these things, now you need to open a statement of affairs, an opening statement of affairs, then a closing statement of affairs to get your opening capital, your closing capital, your profits and the rest. Fraud may be easily committed. It is not possible to ascertain the arithmetical accuracy of the books. What does that thing remind you of? Arithmetical accuracy of the books. Trial balance. You know, trial balance is a list of balances like extracted from the ledgers, which helps to show the arithmetical accuracy of those ledgers. You get some. Now, let me see. Computation of profit from two balance sheets. This can be referred to as pure single entry. Under this system, the records are incomplete. All saying the same thing. The profit or losses are ascertained under this system by a comparison of the value of the opening capital with the value of the closing capital. Because of insufficiency of information, the statement of affairs method will be adopted. That is the opening statement of affairs and the closing statement of affairs. To get your new capital, it's basically your opening capital, add your net profit. It's like following the format of balance sheet, which is like on your left side. That's if you're using the TK. Your left side, your capital, add net profit, less joins. Then the only different thing is that you add your additional capital. So you can even do that. Opening capital, add additional capital, add net profit, then you less joins. That's how you get your new capital. Yeah. So let me write that on the board. Then from the formula, we all know like changing subject of the formula, we'll be able to get our profit from there. So this is you. I just want to like give a like, how will I put it? Like just give the formula before I go into like start solving some exercises you get. So to get your new capital is equals to your opening capital I said you add your additional capital just to like make it easy. You add your additional capital. I'm trying to make my handwriting as legible as possible. Plus additional capital plus your net profit, then you less your drawings. So the new capital is equal to opening capital plus additional capital plus net profit less drawings. Now how do we get net profit? You make your net profit the subject of the formula. So bringing it, okay, let's just say, let's leave it on this side and take everything here to the other side. That will be new capital minus, once this one crosses the equal to sign, it turns to minus opening capital if plus sign passes the equal sign, it turns to minus additional capital. Remember, this opening capital has an invisible plus sign, so minus additional capital. Our net profit is already, we want to leave it here. We want to take less drawings to the other side to be plus drawings. Why did I write less drawings? Sorry. This minus already means minus drawings. So if you take the minus drawings to the other side, it turns to plus. So now we're adding our drawings. Plus drawings is equals to net profit. You get? So let me rewrite it again. Net profit is equals to new capital minus opening capital minus additional capital plus drawings. So my reason for writing this now is for us to know the formula to get net profit, to get our net profit, and to get our new capital. They are very essential. If we know these two formulas, it's going to be very easy for us in finding single entry. Let me rub off those two. These are the two formulas we need. You guys see my poster? These are the two we need. Get me? So let's try and memorize this formula. Honestly, since my secondary school, I've actually been taught this topic since my secondary school. I attended a federal government girls college, so I would say I learned all these things. Some of the topics I've been taught in my university. I've done most of them in my secondary school. So it's just for me to keep reading and keep memorizing them. Yeah. So these are two formulas I need. So now let's see if I can solve an example. Okay. So you guys know how I normally do it. I'm going to snap the question. I'm going to put the question. I'm going to attach it before this clip so that you guys can see the question, then follow me, because I can't write the question on this board. It's not going to be enough. So I'm just going to present the solution here. So it says the following is the statement of affairs of, I guess maybe when I'm editing this video, I'll just put it around this side instead of putting it, so you guys be following it to be easier. The following is the statement of affairs of Ujo Enterprises as at 1st of January 1996. All these creditors, bills payable, plant and equipment stock, exactly. So this 1st of January is telling us, okay, wait. On the 1st of December The following were the ledger balances: creditors 1,500, bills payable 800, plant and equipment 2,500, stock 500. Prepare the statement to show the closing capital and net profit solution. So now this closing capital, before we get this closing capital, how do we get closing capital? We need to prepare our closing statement of affairs. It's from the closing statement of affairs that we'll be able to get our closing capital. So everyone, from the question, you see the capital already, 3,000. So there's no use for us to start opening. Is if we were not given the opening capital, then we would have needed to open from the balances of the opening, the opening balances, we'll be able to get the opening capital you get. So what we need now, we were told to prepare the statement to show the closing capital and net profit solution. So we need that closing capital. So let's prepare a closing statement of affairs. That will be, what's the name of the business? Okay, Ujo Enterprises. Let's start, right? Ujo Enterprises. I just hope this board will continue. Ujo Enterprises. Closing statement of affairs. Statement of affairs. As at 31st, it says as at 31st December 1996. Have you guys noticed something from the, let me tell you, because I haven't said it, the statement of affairs is just like the balance sheet. It looks like the balance sheet. It is a balance sheet. It's just that in single entry it is called statement of affairs, but for a double entry system it's called a balance sheet. So let's look at the closing figures. In the additional information, they said on 31st of December 1996, the following were the ledger balances. That is your closing balances. I remember I said you use your closing balances to get your closing capital. So on the 1st of December 1996, the following were the ledger balances: creditors 1,500. So let's be following it like that. Okay, creditors 1,500. Where is creditors in your balance sheet? If you have the idea of the balance sheet, it will be easier for you. So where is your creditors? Where is it usually placed in your balance sheet? Is it on the debit side or is it on the credit side? So it's usually here. This is where the creditors are. Fixed assets are always here. Then your current assets, then your capital will be here, and your creditors, both your current and long-term liabilities. But I don't think they give us long-term liabilities here. So creditors, let's write it. Let's leave space for the capital. This is where the capital will be. This is what we're trying to find, you guys. This is what we're trying to find. So creditors, we said creditors is what? Creditors is 1,500. Let's put our Naira sign. Naira sign. DRCR. Creditors is 1,500. Yeah. Bills payable 800. You guys, I don't have my calculator here, so it's already been solved here. So I'll just get the total figure from it. Bills payable, and I would have used my phone, but I'm using my phone to record. So bills payable is 800. Plants and equipment. Now this one will fall under assets. Plant and equipment, stock, debtors, bills receivable, cash. All these are under assets. So let's separate it. Fixed assets. This is under fixed assets. So under fixed assets, what do we have? Plant and equipment. That is what? Plant and equipment, 2,500. Then stock. Stock is not a current asset, so let's try and be separating it. Stock. Stock is 500. Debtors 1000. Normally I wouldn't write this thing out like this. In my previous videos I always like write it out before I come and just be like explaining, but I just say let's be following. You get, I think that's better. But if you guys prefer the other type, just let me know in the comment section. Thank you. So debtors 1000. Bills receivable 700. Cash 10. Yeah, cash is 10. Then we done this. So now what's the total? Like I said, let me go to the solution, because I was actually on the question. Let me go to the solution. I just want to like add everything together. Sorry. 25 plus 500 plus 1000 plus 700 plus 10. That will give us 2210. But we can't actually like put it as the total figure. You know, it's the highest figure that will like. Or is this one higher? It's the highest figure that would sum it. Okay, I think this should be bigger than this side. 25 plus 5, 3000, 3000, 4000, 4700, 4710. So I thought I couldn't even use my head. I would need calculator, but it doesn't actually need a calculator. So 4710. Obviously, from looking at the two figures, you know that this side is obviously bigger than this side, so we'll be able to get our balancing figure. Our balancing figure will then become our capital. So let me put this one as well. I always made mistake in my secondary school, like on this balancing stuff. I'll come and I'll be writing the total, and I'll write balance carried out under, but it's actually the figure you're looking for that will serve as your balancing figure. So 4710 minus these two, 1500 plus 800, that is 2300. So 47110 minus 2300. I just want to solve this thing. So instead of copying the figures, that's 0, 1, 7 minus 3, that's 4, 2410. So clean this. Our capital now is 2410. Or let's just see, our closing capital is what? 2410. Let me write it here. Capital closing. Give us out 2410. In the question, which I've already like pasted, you'll see the capital, like that's the opening capital. That question gave us our opening capital. So that was why we didn't have any need to like prepare a opening statement of affairs again. So we've gotten our closing capital. So that's the first part of the question. Then the second part of the question said, prepare the statement to show the question and net profit solution. So now, going back to our formula, which we said of net profit, what did we say? We said our net profits would be, rather we changed it from the, I don't have that profit formula of like by heart. I only, since I know the formula for new capital, which is your opening capital, add additional capital, less drawings, and opening capital, add net profits, add additional capital, then less drawings. That's how you get your new capital. So from there, I usually just like make my profit the subject of the formula, then I'll have my formula for my profits. So instead of going over that again, let me look at the formula for the profits here, which is your new capital plus drawings minus your opening capital minus your additional capital. And as it is, where is it? As it is now, we don't have an additional capital. Looking at the question, we aren't given any. Is if we saw something like maybe purchased equipment, you know, all this equipment, they form part of your capital. It is what I've explained this in other assets. I think there was a video I explained on assets, like your fixed assets are what you use to produce. You use them to produce, so you're using them to make or they're like your fixed capital, but not in cash. So your net profit. So let's do it. Now we have in our formula, which is new capital plus drawings minus opening capital, we have our new capital, we have our drawings. Do we have our drawings? That's the question. Are we given drawings in the question? Yes, his drawings during the period amounted to 800. So it's in question. So let me rub off this. Since we know our closing capital, let's keep it 2,410. Let me not clean this Ujo Enterprises because it's still under Ujo Enterprises. You guys, please don't laugh at my duster, please. Don't laugh at my duster. So, where is this one coming to? I think 362. So now, to make it more huge and polished, you don't just write net profit. You write your statement of profit as at 30. It's 31st. Why are they writing 21st? Don't mind these people. 31st of December 1996. So, statement of profit as at 31st of December 1996. CRDR. Yeah. So this one is not like a T table. Just that means this DRM is not even necessary. I'm already used to writing these stuff. Just for your 2 naira signs. Though you guys, according to the new way of solving, all this balance sheet is now statement of financial position. Profit and loss account is now statement of comprehensive income. What else? I think those are the 2 things that were like changed. Yeah. So, and the accepted way now ahead is the horizontal way. That is like T table is no longer in use, but I still like that T table because it's actually more easier. But anyways, statement of profits, closing capital. What was our closing capital? 2,410. 2,410. Add your drawings, which you saw that was 800. Add your drawings. 800 to give you plus 4 is 12. 3,210. Less your opening capital, which is already in the question as what, 3,000. Less is something, in order to show that it is to be subtracted, you put it in brackets. Let me clean this. Now we have our net profit as 210. Let's clap for ourselves. So now we've gotten this as 210. So we've solved it. We've gotten our closing capital. What we asked to do was to get our closing capital and our net profit. So this is our closing capital and this is our net profit. Okay, so moving on to the next question. I do not want this video to be too long, so I guess I'll solve the second one in my next video. So don't forget to like, share and subscribe. Bye.